let's bring in the CEO of Axis Bank, Shikha Sharma, joins in on the show. Shikha, hi, thanks for joining in on the show today. Firstly, Shikha, on the Enam acquisition front, there have been a lot of reports about the RBI actually raising the number of questions around the deal, stating its reservations on the deal as well. What's the status right now, and what is the RBI's position as we speak?
In the conversations that we've had with RBI, we have not sensed any reservations on the deal, since it's the first time that a structure like this is happening in the Indian marketplace. They have obviously had to examine the policy framework for looking at a structure like this, and that is what has meant a fair amount of processing time. But we have not heard any significant concerns. They have in fact given us in principle approval, in which states a set of conditions, and we're just looking at whether that impacts the structure in any way. But as I mentioned, we haven't heard any concerns. We had sounded out the RBI before we did the transaction. So,
But Shikha, given the way that economy or Indian economy is slowing down, capex is taking a hit, do you expect your loan book also to slow down, or the loan book growth to slow down?
The loan growth is going to depend upon what's happening in the economy, and that in turn is going to get impacted by inflation and interest rates. But our belief is that we should still, at the industry level, see a credit growth of around 18 to 20%. And given that we are still a bank which is growing a little faster than the industry, that's about where we should land.
Shikha, for the rate at which you expect your loan book to grow, do you expect that you will need to raise additional capital anytime soon to support that number?
Not immediately. Well, when we did the last capital raise, we had indicated to investors that based on the growth rates that we had projected and the need to maintain a capital tier 1 capital ratio of around 9%, that we would probably have to come back to the market in a 2.5 to 3 year period. I think that's the kind of time frame we're still talking about. So it's still some time away.
So, Shikha, can I read in between lines and expect that Axis Bank will raise money in the current financial year? The instrument is something which is not defined, but yes, you will hit the primary market this year?
I think it's fair to assume that somewhere in calendar year 2012, Axis would probably come to the market.
But are you seeing some slippages when it comes to SME, agri and unsecured retail loan segments?
At this point of time, our credit book is holding well, and we're not seeing any stresses on it. Last year, of course, the economy did well and credit costs were at one of the lowest that we have seen in a long time. But our long-term credit costs are around 1%, and we think this year they should hold up, and we're not seeing any early signs of stress.
Shikha, but is the cost of capital for Axis Bank now moving up?
I'll take that question in two parts. As far as the CASA ratio is concerned, what we watch for internally is how our CASA is growing and how it's growing relative to industry. There, I think we've performed consistently better, significantly better than the industry average. So we are happy with our CASA growth. And as I mentioned earlier, it's reflective of the quality of the liability franchise we have. As far as margins are concerned, our long-term margins have been around 3.25%, and we believe that given the Indian marketplace and the product mix that we have, long-term margins should be around 3.25 to 3.5. They had gone up in Q3 and then come down in Q4, but our long-term range, as I said, should be around 3.25 to 3.5.
Shikha, finally, before we let you go, what action are you expecting from the RBI today?
The RBI has been very consistent about saying what are the goals that they're pursuing. So they want to balance growth with controlling inflation. And as was evident in the actions that RBI took in the last monetary policy, inflation is a key concern for RBI, and they would therefore, I guess, take actions to increase interest rates if that's the only way to control inflation right now.